And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, proud sponsor of the Syrah Rail Conference 2025, powering progress, connecting economies. Good evening. 10 minutes after 6, I'm Stephen Grootes. Welcome to The Money Show. Well, it's an extraordinary day in many different ways. We'll speak to the CEO at Shoprite, Pieter Engelbrecht, in just a moment. And you heard the sort of headline from their results out today that the amount of business going through Checkers 6060, just through the app alone, comes pretty much close to the total business of Pick n Pay. I mean, it is extraordinary. The same of Spar. You do wonder if anyone will ever catch up. But the cycle of these things is that no one really stays on top forever. That said, I can't for the life of me how someone catches up to Shoprite at this moment. The other big story, of course, the gold price going past $3,500 for sort of the first time in what I suppose you'd call modern history, and then only slipping back a little bit and then going straight to $3,014. Also really incredible. So yeah, a lot going on with gold, and we all understand the reasons why. The sort of global uncertainty, the attitude of the Trump administration, etc., etc., etc. We'll talk about that in a little while on The Money Show. Also, the Motus Group today, the fact that you're holding on to your vehicle for longer, and I don't blame you. I do the same, simply because they're just so expensive, becoming really close to unaffordable, I think, for many people. And so that's having an impact on the motor industry. One of the things that seemed to raise the number of sales was that established brands, I suppose you would think maybe Suzuki, Honda, a couple of them, actually launched a lot more entry-level models. Toyota had one. And so all of that is what's driving sales for the moment. Tells you where people are buying. And then also, just interesting, we'll end off the hour with a conversation around wine. This afternoon, ArcelorMittal putting out a statement on SENS, confirming what we already know, that without any funding, any further funding, they are going to close their long steel business. Open to suggestions on how to save it, but I'm afraid I don't have any. 011 883 0702 021 446 0567, and I know you'll have a view on a voice note this evening on 072 702 1702. What is it, do you think Shoprite are doing well? What are they still doing badly? Well, I know you'll have a view on that tonight.
702. Stephen is on The Money Show.
6 to 8 p.m.
Well, the Shoprite story still building momentum. The group reporting today, their profits up by 18%. Headline earnings per share up nearly 16%. The Checkers brand saw its sales grow by 14%. And finally, I think for the first time, a proper figure for the 6060 delivery service, growing at 48% for the year, now represents around 9% of Shoprite's total sales. The CEO of the Shoprite Group is Pieter Engelbrecht. Pieter, good evening. Your 6060 service growth is exceptional. I realize you were ahead of your competitors. It was kind of the right time. Do you really expect this level of growth to go on for much longer? 48%.
Yes, I actually do. And there's a few reasons for the statement like that. But very bold of me to do that. But firstly is the investments that was made. The first thing to realize is that 6060 is not an app or a piece of web software. It's a platform, and it's a scalable platform. That means, and that's what we're busy with now, is that we have the ability to start adding the rest of our business units also onto that platform. We also have now reached that point, which I'm very happy about, is that we internally don't talk about bricks and mortars and digital anymore. We talk omnichannel. We believe that unlike what Amazon says that they are the everything store, we are the everyday store. And the investment that was made, 5 years ago during COVID, and then what happened thereafter, and the speed at what development and innovation is being done in that area, gives me that kind of confidence to say there is so much still to do. To give you just a little context, on average, on the 6060 platform, there are over 900 software upgrade releases a year being released onto that. To give you an idea, and all of those are enhancements and trying to make things better in there. And for years now, you will remember and know that we've been spending capex in the region of 8 billion a year, at least for the last 3 years. And if we compare that to rest of market, there is a sizable gap between what investment was done on tech. I know most of our money goes into stores, and we can talk about the fairly large number of new stores that we open and what that means. But that in a nutshell around why I can say I think there's a lot of headroom on the omni-channel platform.
So your sales through the platform, if I can call it that, are 9% of your total sales as Shoprite. And that percentage will, I accept what you say, will continue to grow. Where do you think equilibrium will be? Is delivery going to be 30% of your total sales, 50% of your total sales, more?
I have no idea where this is going to end, because we're already in scenarios depending on South Africa being such a interesting place, that in some cases it can be as high as 50% already because of the security in a certain area. You feel uncomfortable in evening to go into a certain parking lot, but you're actually very happy with the store, but you feel unsafe. So you use the 60/60 service. And in that case, the percentage would be much higher. And some other cases, it's because of the transport nodes and the access and whatever else is complementing the store, it may be less. So I cannot give you a number today. Secondly, is the introduction now of general merchandise. That is really, I've taken us, I don't want to say take us by surprise, but we were very pleased with the fact that it seems like over time people have forgotten how great the hyper stores actually is and what they mean in terms of assortment. And the quality of product that's in there, and that you will find from a smack to essential product, and at the greatest of value. And I think a little bit that has to do with that is that game at some point in time, I think, was sort of the first choice of general merchandise. And with them closing down and getting smaller, there's now this fantastic opportunity for the hypers. We've added some ranges and assortments that we generally are not known to sell. I did say in the presentation today, who on earth would have thought 3 years ago that Checkers Hyper, in that sense, would sell the most Dyson hair dryers in a year.
Yeah. No,
it's incredible. And then we have to add pet and outdoor and pharma. Pharma is a big one. You've seen that we've mentioned it a few times that we are changing our investment on the pharma because we see from the data that we have that customers' purchases behavior has changed in terms of personal care, health, and beauty.
Okay, so it's all a great story for you. I noticed that your Shoprite pricing inflation was below 2%. Inflation is low at the moment. Are you putting a lot of pressure on your suppliers to keep your prices that low? Are you putting more or less pressure on your suppliers than say Pick n Pay is to keep prices at that level?
We have in South Africa this thing that called fair and equitable. So it's not a question of us we can't use our size to force better prices. We could most probably get from our suppliers more support for a promotion because they need volume growth, because volume growth is almost all that they have in a no inflation environment to curb their costs. And at the moment, Shoprite is almost the only retailer growing volume. Yeah. So that happens. But in terms of using our volume and size to get better pricing, and that is not happening. That's not what's driving the inflation thing. I think it's the risk of our major manufacturers that there is no volume growth currently. I saw this weekend two of South Africa's biggest suppliers, and they are talking about budgeting this year for a 1% volume growth. Now, certainly our costs are not only going to grow by 1%.
Yeah.
Your salary and staff cost is not going to grow by 1%. So it is a tight squeeze at the moment in the retail space around the fact that there's low or very little inflation. I want to mention this to you, please, if I may, is that in the you mentioned the low inflation and it is almost down to zero, but last month alone in the Shoprite brand, 13,300 items was cheaper this year than last year.
Sure.
That is an enormous amount, 13,000 items. And that's what's currently in our space, and therefore so critical now, and we're so happy that we made some technological investments over the last couple of years, things like price optimization tools, personalization, Rex platform, Rainmaker media, all those things now maturing, and we've put some big developments on artificial intelligence to enhance these things. And yes, we hope that we know that these is what we need to assist us to navigate this year in a very low or zero inflation environment.
Sure. You said today you created 8,700 jobs, direct jobs over the period. And when you consider the environment we're in, that's a big number. And something I think you said you were proud of, every right to be, absolutely. You're also trialing 2 stores in Cape Town that don't have cashiers. You use a smart trolley. Are you looking at reducing the number of people working in your stores at some point in the future?
No, not at all. So, taking you back, we do a lot of innovative things, to just prove that we can, and also to test technology. So we have before done drone deliveries on your lawn. We have had stores like the Amazon Go stores where you shop and you just take this stuff and you walk out and your credit card gets charged. And now we've tested testing this smart trolley to make sure we have the technology that is interoperable with the software and the systems that we have. We've just completed a 1.3 billion rand upgrade of our point of sale system, and we have to make sure that these software systems can be interoperable with new technology and developments that are working worldwide. But we certainly, the first thing that comes to mind in Shoprite is jobs and job protection. We're proud that we have not retrenched anybody. In the last 10 years, I cannot recall that we retrenched anybody, but we've created new jobs every single year. And the 8,700 that you refer to are direct. There's people that's on our payroll. It's not including indirects like security staff, trolley collectors, merchandisers. And jobs is not the thing that people should fear that we will. I think, also for self-checkouts, we've tested that so long ago, I almost forgot about it.
Pieter Engelbrecht, thank you. I'm very glad to hear it. I really appreciate the time. It's an astonishing story. Pieter Engelbrecht is the CEO at the Shoprite Group on The Money Show, 24 minutes after 6.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
Well, gold hitting another record high today, $3,515. Gold soared by around a third in value since the start of the year. Petri Redeling-Hayes is trader and founder at Herenia Capital Advisors. Petri, good evening. I mean, we know some of the long-term reasons for the historically high gold price. Central banks have been buying gold, a general geopolitical uncertainty. In the short term, I suppose, what has pushed it up today? Why today, I suppose, is the question.
Well, good evening, and thank you for having me. And I guess, it's a good question. I can give you which answer? Because there are more buyers than sellers.
Thanks. That's great.
Great. Good. Right. So essentially, from a technical analysis perspective, there was a big resistance level at around 3,430 to 3,440 in that region, right? That essentially broke on Friday. So we had a close above that for the first time ever on Friday. And yesterday and today, the market is just basically flying. This is on the back of a number of shorter-term factors, like you mentioned. Long-term picture, we know central banks are buying like crazy, particularly China. We also know that gold kind of acts as a leading indicator for the rest of the commodity market. So we see gold really starting to run. We've seen commodities pick up sort of since April, and they're starting to run a little bit. So we probably have a little bit of legs in the gold market. But there's a combination of two things, I think, that are driving gold at this stage. One is the fear around, what if the Trump administration messes it all up?
Yeah.
So there's that flight to safety. But the other thing is the Fed essentially have walked away from their inflation targeting mandate. So they've got the U.S. Federal Reserve Bank have two things that they care about: keeping inflation below 3% and supporting the jobs market. And they came out and said, well, look, we don't really care if inflation goes above 3%. We care about supporting the jobs market. That's the only thing that we're going to focus on. And I think that could be a little bit of pressure from the Trump administration coming, through to the central bank, or whatever the reasoning may be. This is the stance that they've taken. So the market is moved into a position where they're expecting, believe it or not, rate cuts into slightly higher inflation in order to support economic growth and the job market. So in that sense, people are essentially going, well, lower interest rates is going to, potentially grow the economy a whole bunch. And this is, how do I protect the value of my investment from the deterioration of a weaker dollar? I need to get into safe haven assets. And that, again, is driving the gold price. Because if interest rates in the U.S. come down, the dollar weakens, commodity prices up. And that bridge between sort of the weaker dollar, higher commodity prices is gold. Gold moves first, commodities move later.
Petri Redeling-Hayes, I'm sorry, you're going to have to leave it there. Thank you, trader and founder at Herenia Capital Advisors.
The Money Show.
The markets.
Ryan Hill's head of fundamental sales at Absa CIB. Ryan, good evening. Is that your theory too? It's essentially about interest rates in the US?
Yeah, thanks, Stephen. Evening. I would agree. Generally speaking, that, of course, if you have an environment where rates are being cut, given the fact that you don't get any returns on rates with respect to gold, it's not yielding anything, that will generally be positive for gold prices as well. So to echo some of the sentiment expressed by your previous speaker, definitely gold hitting new all-time highs on the back of the expectation that the Fed will likely continue to, will cut rates, I should say, not continue necessarily. It's interesting, if you look at what markets are doing at the moment, they're discounting something like a 90% chance of a 25 basis point cut by the end of September. And I think that's been reflected in the gold price as well.
Shoprite, incredibly strong results and obviously incredibly strong share price as a result today.
Yeah, and I remember being on the show some time ago, reflecting on what I thought was an extraordinary set of numbers, and just once again, another market expectation beating set of results, which saw that stock closing up north of 5%. Incredible to see how well that business has grown, particularly in the online delivery space as well. So to your point, I think also see this in the context of some of the weak updates that have come through from the retailers recently, but certainly Shoprite, another fantastic set of numbers.
What's pushing Sasol at the moment? I realize they had results. They weren't terrible. Everyone goes back to the capital markets day, the change in sort of direction. But it seemed to me, I realize oil prices were slightly higher, but clearly something's driving Sasol.
Yeah. So honestly, we've been scratching our heads as well to some extent. I mean, the numbers that they produced recently did beat when you look at them superficially. And their free cash flow numbers were probably better than the market was expecting. We think what's really happening here at the moment, Stephen, is you've got something called a diesel crack spread, which is basically the difference between the oil price and the price of the refined product, particularly in the form of diesel, which is actually quite elevated at the moment as a consequence of elevated demand for diesel in economies like the US, etc. And we think that that's possibly driving some of the optimism around the free cash flow generation outlook for the likes of the Sasol. Bearing in mind, of course, that their results update recently, they also did say that they have started to delever, and I think the market's taking some optimism from the fact that, their net debt position might land in a better position, and we might see less risk around the fact that they've got dollar debt and free cash flows in ZAR terms. So bottom line is market's clearly believing some of the guidance out there, and you've got these diesel crack spreads which are providing a bit of a tailwind as well.
Despite all of this, Shoprite and Sasol and the gold price, the JSE All Share closed down, and banks and retailers were quite softer.
Yeah, that's right. So, banks obviously quite a large component of the top 40 overall. So, the banks index closed down, I'd say, on average about 2.5%. Retailers, as a basket, basically also closed down quite meaningfully. That was down 2%. What we're seeing there is, in contrast to the likes of a Shoprite, the clothing retailers in their recent updates have been showing that actually they're finding the consumer environment very tricky, very difficult. It's a bit of an anomaly where you've got these sort of incredible auto sales, but at the same time you've got this weak clothing environment. It does seem as though on the back of these numbers, various analysts have been downgrading their numbers for the retailers for consensus earnings, and as a consequence, you've seen these retailers continue to come under pressure. In fact, you saw that again today with Truworths, which was down something like 4%. And last week's numbers showed, for example, that the second half was considerably weaker than the first half. So clearly, market continuing to see negative expectations unfold there.
Ryan Hill, thanks very much indeed. Head of Fundamental Sales at Absa CIB. Bringing the time on The Money Show to just after 6:30.
The Money Show.
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
And DSTV channel 856.
Well, the automotive group Motus reporting today. Our preference for cheaper cars, the fact we're trying to hold on to our cars for longer, is making life a little tougher for the industry. The group reporting its revenue down 1%. Headline earnings per share up by 5%. Ockert, Janse van Rensburg, is the CEO at Motus. Ockert, good evening. You say in our market there was some growth in the passenger vehicle market. How much growth is there in quite a tough time?
Good evening, Stephen, and yes, nice to talk to you again. It's interesting that, perceptions and facts are sometimes slightly different. The reality is that the new vehicle market seems to be quite robust at the moment. And in fact, even in going beyond June, in July and August, we were still seeing that, the vehicle market continued to be strong with more than 50,000 vehicles sold per month. This is much higher than what we had in the previous year. And when you look closely at our results, our new volumes for South Africa actually grew by 8%. If you are ever dissected a bit more, you will see that the revenue growth isn't that high in rand terms, which means people have been trading down, and even though the volumes are higher, they have been buying smaller vehicles, cheaper vehicles, and you probably see that trend will continue in the near future as well.
And what that means then is you need entry-level vehicles to sell. Some of the bigger brands, some of the more established brands have been producing those. Does that help?
Yes, I think that's the area of the market that certainly has produced the most growth in the industry at the moment. So you would have seen that most new entrants into our market all coming with vehicles that's slightly cheaper in price. Not so many have been able to really crack that entry level. I think that when you look and you try and find out who's actually selling those entry-level vehicles, it's more the products that are being manufactured in India rather than China. And all our new entrants have really been around Chinese. So you would have seen also that we announced a week ago that we now also are importing Tata. We launched that at the beginning of September, and that is aimed more at the entry-level market as well, because we do believe that is where the growth opportunity is going to lie in the near term.
People used to talk about owning the latest BMW, Mercedes-Benz or Audi. Now I think people are looking at SUVs. But is that sort of demand for luxury sedans just fallen off a cliff?
Yes, it has actually been lower, although we have seen that the likes of BMW is still is sort of trying to hold its own. I think you have certainly seen that Mercedes and both Audi, Land Rover and Volvo all, having much lower numbers. So unfortunately that has happened for those brands. But, we are active economy here and abroad. So, in the end consumers talk, and what the consumers want is what you need to be able to deliver. I think for us it is quite important to still, maintain our market leadership where we sell 1 in 5 new passenger vehicles. So we have to move with the times, and that's also been part of what we've been focusing in the last year, is to make sure that our brand representation at our dealership level is what the customers want.
A lot of talk, obviously, about cheaper Chinese cars coming into the market. I don't know if they have the sort of dealership networks, the service networks that you have for more established brands. I'm told anecdotally that finding parts can be a challenge. Do you expect that to change quite quickly? I mean, is that going to change the kind of service you provide maybe at some point?
Yes, I think you have to move with the times, and I think with new entrants, they normally do struggle a little bit when it comes to parts and the like, as you just mentioned. I do expect them to make parts available. I don't think it's something that they will ignore. We have certainly seen the more established ones, the ones who have been around now for a couple of years, and now are throwing the Chinese names like Haval and Cherry around. They certainly have, already started with proper parts distribution hubs, and you probably see less of an issue there. So I think it is developing, and you have to see for what it's worth. I think a brand new entrant will find it tough, and part of the value proposition is around being able that you can service the vehicles later. I mean, even if you look at our results, we make 55% of our profits not from the vehicle side, from the selling of a vehicle, but actually from other providing parts, services, car rental, etc. And I think that's how everyone in the dealership space will look at it as well, is if you can't provide, proper parts and delivery of service later, they probably wouldn't want those brands. So the brands themselves need to adapt as well to make sure that the dealership network do want them.
When people keep their cars for longer because they don't want to buy a new car, and I appreciate what you say about the new car market, but do people keep coming to a sort of frontline service provider like you, or do they start to look for a cheaper option? In other words, the older someone's car, the longer they're hanging on to it because they can't afford a new one. Could it be they start to look for an option that might be a little cheaper than you, Ockert?
Yes, so most definitely. I think what people do is they stay with the brand for a duration of time, probably as long as the warranty periods are still in play. You will not easily see people switching out. But once you pass the 5 years, or even in the case of underwear, they got 7 years, you start seeing people switching out, going in more into the independent service providers. And if you analyze the market, only about 2.5 million vehicles are currently, sitting in that warranty period, while probably about 9.5 million is sitting outside of that period. So certainly that's an area of focus for us, and that's why we've also invested heavily into the aftermarket parts business, where we derive more than 23% of our profits from, is supplying parts to those sectors. And I think the most exciting one for us at the moment in South African space is certainly that we've moved more into that informal space as well, where there's a lot of mechanics in informal settlements of repairing vehicles, and making sure we can get quality parts also into that market, which was probably quite underserved before. So that's been a focus area for us. And then I suppose aftermarket parts in general, whether it's here or abroad, people do hang on to the vehicles for longer. We've seen those replacement cycles extend. And even our business in the UK in aftermarket parts is performing exceptionally well.
Ockert, Janse van Rensburg, thanks very much indeed. CEO of Motus, do appreciate it.
The Money Show
with Stephen Grootes.
Well, the international wine critic and master of wine, Tim Atkin, giving 2 wines a perfect score in his annual South Africa special report. He's given the Chenin Blanc 2024 Alhate Magnetic North and the 2023 Porcelainberg Syrah, both 100 points. Tim, good evening. I mean, I suppose this is probably an impossible question. What makes a perfect wine? How do you make a wine that gets 100 points?
Well, I mean, all I can say is perfect for me. I would just say that it's something that cannot be improved upon. And they're wines that move me. I think they're wines that have an emotional connection with the drinker, in this case, or the taste of me. So I mean, how do you define perfection? I agree. It's slightly silly in a sense, but I think that it's just my way of saying these are two fantastic wines. I think they're world-class wines.
What makes them better than the others? I mean, two other wines got 99 points. Now, obviously, I don't think you were just being picky. There was clearly a difference.
It's funny. I don't know if you've ever seen, this is Spinal Tap, a film about an English rock band, and one of the guitarists in the band has a special amplifier that goes up to 11, and he always says that 11 is one louder than 10 and everything else goes up to 10. So I suppose the difference between 99 and 100 is pretty small. It's infinitesimal almost. But I just say these are wines that are just slightly better, but only according to me. I mean, that's the point.
So, okay, you went around, you drank a lot of our wines.
Tasted.
Tasted, excuse me. Obviously, there would be a lot of competition in something like this. Do you find that there's certain trends or certain types of wine that are really beginning to stand out a little bit from the crowd? And time again, you sort of come back to them?
Certainly, certain varieties stand out, and I think that Chenin Blanc is obviously one of those. And I think Syrah, although Syrah is slightly underappreciated by consumers, particularly in this country. I think in terms of stylistically, what we're seeing and have seen really over the last 10 years has been a move away from oak and power and alcohol towards a little bit more finesse. Ibn Sadi, a very famous South African winemaker, talks about it as the difference between making tea and coffee, and that tea is a less extractive process than making coffee. And I think that is paralleled really in what's happening in the wine world, particularly the red wine world.
Why does that happen? I realize that's a strange question. It's like asking, why do fashions change? But they do change, and you need to understand why they change if you want to make money from it. If you're making wine, you need to sort of be judging where the market is 2, 3, 4, 5 years from now or more.
Absolutely. I mean, part of my job, I suppose, as a critic, and other wine critics would say the same thing, is maybe to move the market in a direction that we believe is the right direction. I mean, it sounds a little bit arrogant, I suppose, but I think that that's part of it. But I also think consumers change, and I don't quite know how it happens. I think it sort of happens organically in a way. I think there's more interest these days amongst interested consumers in where stuff comes from. I mean, not just talking about wine, but I think that's true with food as well, particularly the boost in organically sourced food and things like that. I think people are thinking a little bit more about what they're putting in their bodies and why. I mean, assuming they've got enough money, obviously, for that to be a possibility.
Yeah, I mean, that's interesting because I think that's absolutely true. And you suggest that one of the reasons for the success of some of these wines that we've been talking about, you describe it actually as I was struck by the phrase, a visceral attachment to the land. What do you mean by that? Yeah.
I think it's true, isn't it? I mean, I'm married to a South African, so I get a little bit of this at home. I think that South Africans are brought up with this sense of place. I mean, I'm not quite sure how to describe it, but I think that it's much stronger for a South African than it is for, say, a Brit, particularly if you're a Brit living in a city. I think that South Africans are aware of their environment, and I think they're marked by it in a sense, and I think that's very true of the best winemakers.
It's interesting. You've got to I suppose the right expression would be you've got to give full expression to the terroir, you've got to give full expression to the soil, you've got to give full expression to what the grape is growing in. So it's not just about the grape and what you do with it, it's where it all comes from.
Yeah, and I think that's been a big trend here, that South Africa's obviously always had fantastic vineyards, but there's been much more focus on that in what I call the kind of postmodern wine world here, which really began in about 2010. I think we're only talking about 15 years. And even though, great vineyards were known in the past, I mean, right back to the 17th century, I think that this focus on individual sites, many of the best wines in South Africa now are expressions of place, in that French word terroir, which is difficult to define in a way, but I think it's this somewhereness. I think somebody once described it as that, and a lot of the best South African wines now have this somewhereness to them.
Climate change is having a big impact on agriculture everywhere, and it's, I'm sure, having an impact on our wine sector. And I read from your report, we're actually losing quite a lot of sort of vineyard.
Yeah, but that's for other reasons. I think it's more for economic reasons, that basically it's very difficult to make money growing grapes in South Africa. And I think a lot of farmers are pulling them out because it's uneconomic to do so. And my report has a fairly lengthy 20,000 word introduction. And one of the points I cover in that at some length is climate change, but also the profitability of vineyards. I think where climate change is concerned, I mean, obviously drought has been a problem. When there was the period, 4 or 5 year period between 2015 and 19 really of drought, that was when Cape Town was nearly back at almost ran out of water. Since then we've had some pretty wet vintages in 23 and 24, so I think the climate is fluctuating a lot. We're getting these extreme weather events, but South Africa seems to be reasonably well buffered where its vineyards are concerned by these two oceans, and the oceans are comparatively cold oceans and bodies of water. So I think that South Africa is, better placed than many places to deal with climate change. Certainly somewhere like Burgundy in France, which is more continental and more marginal. I think South Africa has a range of climates. It can go higher. It can go to new regions. And I think those bodies of water are going to help South Africa to deal with it to a certain extent.
I'd never thought of it like that. Tim Atkin, thanks very much indeed, the international wine critic and master of wine. Well, you're with the Money Show. Lots to come in the next little while. We'll find out more from the fossil ad ban campaign. That's kind of all in the title, I suspect. We'll hear from Rutendo Ndungi as well. And don't forget personal finance tonight. Why do people who earn a lot not save? All of that to come at 7 o'clock.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
The Green Economy on the Money Show is brought to you by the Rose Foundation, giving used oil a renewed purpose and supporting a clean environment one drop at a time. Well, the creative agency Alchemy Collective, they're calling on other creative agencies to join them in refusing to do any work for fossil fuel companies. It's part of a campaign arranged by the Fossil Ad Ban campaign. The advocacy campaigner for the Fossil Ad Ban campaign is Nokolo Mfokwa. Nokolo, good evening. What are you trying to do with this campaign?
Good evening, Stephen. Thank you so much for having us. The Fossil Ad Ban campaign is a program of Fossil Fuel South Africa, and it draws inspiration from similar campaigns that have taken place in Europe, in Canada, in Australia as well. And it's basically a campaign that is working to persuade South African regulators to ban fossil fuel advertising. And we are also calling on individuals, organizations, business, and also government entities to take our pledge to support for action against greenwashing in South Africa. Basically, what we are saying is that fossil fuels are the lead cause of the climate crisis, and they have very many social costs. And the continued use is making us all poorer, unless you are a fossil fuel exec somewhere in a cushy office. Also, while we are still dependent on the use of fossil fuels for energy, the process of actively perpetuating their use through advertising, through greenwashing, through promotional activities, through sponsorships, continues to delay the transition to cleaner, more sustainable alternatives.
Okay. So I hear what you say. Let me come against you for a moment. So without coal producing electricity in South Africa, we would probably all be dead as a society in about a month. And if I produce coal, why should I not be given a voice?
It's not about not being given a voice. It's about us recognizing that the losses that we suffer from the continued use of fossil fuels on the environment and also just on public health in general are much more than the cost of these organizations that work in the fossil fuel industry continuing to extract and make profits from us. It isn't that there aren't alternatives. However, the alternatives continue to not be considered because the public perception that is built by advertising and marketing about fossil fuel companies says that they are a good thing and there's no other alternatives to them. Okay. So by stopping that kind of messaging being perpetuated, we are opening up society to be aware that there's many more alternatives that are actually healthier for our environment and our planet.
Okay, but it's not my job as this fossil fuel company or lobbyist or whatever to campaign. It's your job. And I mean, that's fine. Go for it. But why should one side be denied a voice is the question. I need you to make the argument for me. It can't just be that it's bad. Alcohol is bad. Tobacco is bad. Now, we've decided for some strange reason to say you can't advertise tobacco, but you can advertise alcohol, although I think at some point that will come to a stop. But the argument from the fossil fuel companies, and don't get me wrong, I'm not a supporter of them. I think anyone who knows my track record will know that. I'm saying you need to make the argument. Why should you be allowed a voice and not they if the coal they produce is vital for our country?
Got you. I think based on our own research, right, and what we are focusing on is the greenwashing of fossil fuel companies, which is the act of using misleading and deceptive advertising that makes environmental claims about sustainability, about supporting the just transition in itself, and saying that type of advertising is wrong. It's not to say that we are saying that they must shut down their businesses in the now and all of that. But this is to say that even with tobacco itself, as you mentioned, the tobacco ban, 20 years ago it was inconceivable for other people why there were activists and other members of society calling for the ban on advertising on it. However, in this day, it feels like a normal thing. So even with fossil fuel advertising, I think the most important thing is that we should keep view on the fact that these companies continue to make claims that they are not meeting. They continue to say that they are doing one thing, whereas they are doing another.
You could say the same for every diet pill. I mean, I hear you, but you could say the same for so many things that are advertised.
And I think it's more serious because we're speaking about a planet that is being there's so much destruction to our planet because of fossil fuels. I think we need to keep in mind that nearly 90% of the world's carbon emissions come from the burning of fossil fuels. So we can't make it a light thing that our planet is being destroyed by the continued use of fossil fuels and allow the advertising of such a destructive product on its own, whether it's oil, gas, whether it's coal that you speak of. As much as it's vital for us to produce energy, it's not the only option. And this is the direction in which we are taking the conversation. So if you're saying to the public, no, we don't want to see fossil fuel advertised anymore, everyone starts asking, but then what's the alternative if you're saying this is so dangerous? And it's not that the fossil fuel companies themselves are not speaking the message of transitioning out of fossil fuels. They're actually in their own advertising putting up images of wind turbines, images of solar farms, and all of that, making it look like they're interested in clean energy. Whereas if you look in Mozambique, if you look in Uganda, they are continuously opening every day new projects that are exploring for new fossil fuels.
Notkolo, thanks very much indeed. Notkolo Mfokwa is the advocacy campaigner for the Fossil Ad Ban campaign.
The Money Show.
The Africa Business Report.
Well, Dr. Rotendo Ndungi is the founding director at Tribe Africa Advisory and author of the book Rumble in the Jungle Reloaded. How's it, Rotendo? The situation in Zimbabwe, El Mansour Holdings, they're from Qatar. They've got a big deal with an Australian company about Zimbabwean energy.
Good evening, Stephen, and good evening to your listeners. Yeah, so this is an interesting one, Stephen. It's Zim, Australia, and Qatari company called Al Mansour. They've made a significant investment. There's a big basin of gas, Cabora Bassa, very close to the Mozambique border. It's a gas project, Stephen, and Qatari has bought in a 20% stake. They intend to invest in about $500 million over the next few years. The equity stake is in Victus, Stephen, which is an Australian mining and gas company. So they've bought $25 million worth of shares from that perspective. Al Mansour will form a JV with them, and will be called the Almond Sour Oil and Gas Project. So it's quite exciting, Stephen, because obviously Australia is quite seasoned and a subject matter expert and capabilities in terms of mining. Qatar has always got the money, and a big benefit for Zimbabwe. We know Zimbabwe as an economy has gone through a lot, is still going through a lot. That Eastern Cabora Bassa Basin, Stephen, just to give you the quantum of gas that is there, and that's gas that's quite key from a clean energy perspective, is 2.9 trillion cubic feet, Stephen, and about 184 million barrels of condensate, which is the condensate is the liquid form of gas. So, and I think that basin, Stephen, was discovered in 2023. So there's about, and it's the second largest after the one in Namibia. So a great opportunity there, and great to see players like that playing in Zimbabwe, because obviously Zimbabwe's economy needs that, Stephen.
No, of course. Nigeria, Dangote and Ethiopia are building a massive fertilizer plant.
Yeah, and these are the kind of stories, that really get me excited, Stephen. First and foremost, it's the West plus the East coming together, the two most populous countries in Africa. And remember, 50% of Africa's GDP is in 5 countries, and 2 of those countries are Nigeria and Ethiopia. So it's always exciting when those big boys do something together. The specific investment, Dangote is investing in a $2.5 billion fertilizer plant in Grootes, which is in Ethiopia. It's going to be a 40%, 60% split with Ethiopia. So Dangote will own 60%, Stephen, and Ethiopia will own 40%. They intend to produce, Stephen, about 3 million metric tons per year of fertilizer. One of the key components of the raw materials to produce fertilizer, and remember, Nigeria has been producing this because it's a side or byproduct of their fuel and gas productions, is urea. And fortunately, Ethiopia, in one of its regions, I think it's close to the Somaliland, is sourcing. They've got the gas, they've got the urea components, so they'll be able to actually manufacture this based on assumption that they've also got the raw materials. And obviously, this talks to industrialization, Stephen. It talks to creating jobs. And the intention, Stephen, is that when you have these 2 powerhouses or 2 power countries producing that amount of fertilizer, they can become a net exporter, which is good. So for me, these are the kind of stories, and we hopefully will hear more of this and the success of this. And Dangote doesn't encounter the challenges he had in Nigeria when he created that the refinery for fuel, and we know how that went. So a good story in this case, Stephen.
No, very much so. Kenyan Airways, they want to buy quite a lot more planes. They want $500 million to do it. And I find the airline industry fascinating because it's very, very tight margins at the moment, and yet people are expanding.
Yeah, and there's a recent report that came out. I was reading the headline, Stephen. I've been to Kenya, I've been to Ethiopia, and you can see the terminals. A lot of investment and infrastructure is going in. Kenya financially hasn't been going well. I think the first half year it's reported a loss again. If you remember, Stephen, they went into insolvency some years ago. I think it was around 2018, and they're coming out of that. So the main reason for the $500 million that they need is obviously it's maintenance, is to upgrade their planes and get them to that competitive level. At one time, Stephen, they were probably between them and Ethiopia, they were the undisputed champions of the airlines of the sky with regards to airlines and service around that. I think what just worries me about East Africa, Stephen, is I think last week we also highlighted the fact that Ethiopia has just received funding from the Africa Development Bank for about $500 million to expand their airport. So I'm just worried about overcapitalization in one region. I know we want to grow and develop infrastructure. It's key for FCFTA and driving growth in the economy. But I just feel East Africa, and I also look at what's happened to Rwanda as well. They've invested big time and they've partnered up with Qatar. So I think my worry is just overcapitalization. But hopefully they're planning forward and investing forward from that perspective, Stephen.
And then Gemfields, they're in Zambia, and they found a massive rough emerald.
Yes. So, Stephen, the nickname of the rough emerald, I'm getting excited about the name, is Imbu. which is the vernacular name for buffalo. It's 11,685 carats. So that's a big emerald. It's from the Kagem mine. It's got a history of producing a lot of, Zambia has actually a history of producing a lot of emeralds. I think the last one was for about 7,200 carats. They're quite excited about this. The product will be cut and to be obviously made traceable in terms of standards. They've had a series of other gems that they've produced in the same area. So obviously there's a huge deposit of emeralds in that region. And again, just stimulating the economy in terms of the emerald market. Obviously, it's quite niche. But again, it's quite an interesting story. And they've got this habit, Stephen, of they name the emeralds after animals. So the funny enough, although they've named this one the buffalo, one of the last ones they named was the elephant. And I think they thought that was the bigger one. So when they realized they've just got a bigger one, they're sort of going back. And in my totem, it's the hippopotamus. So I'm hoping one day when they find an emerald called the hippopotamus, hopefully they'll come knocking at my door and say, we kind of think you're connected to this, and maybe I'll be a happy man. But otherwise, a good story coming out of Zambia, Stephen.
All right, thanks very much indeed. Dr. Rutendo Ndungi, Founding Director at Tribe Africa Advisory, author of the book Rumble in the Jungle Reloaded. Nice to stumble over an emerald from time to time. 28 minutes after 7.
The Money Show.
Personal Finance with Warren Ingram.
Warren Ingram is a certified financial planner at Galileo Capital. How's it, Warren? A fascinating topic tonight. Why are so many people who have a relatively high income broke? And I suppose what you need to realize and understand is that just because you don't earn money, it doesn't mean that you're not financially fragile.
Absolutely right, Stephen. And often people with very high levels of income could actually be the ones that are in even bigger trouble than people who are earning a small amount of money. Because when you've got a lot of money, you're able to get a lot of debt, and that means you can dig yourself a really deep hole if you're not careful. And I think that's the situation we find a lot of very high income people in South Africa at the moment.
Okay, so I mean, they might be able to keep going, but the moment something stops, the moment the sort of music stops, they're in serious trouble.
Yeah, I mean, I couldn't have said it better. So we know my favorite personal finance written journalist is Maya Fisher-French, and she did a report quite some time ago saying only around 5 out of every 100 salary earners will retire in a good position. So just think about that for a second. We're not talking about 5 out of every 100 South Africans. We're talking about the whatever it is, 40-50% of people who are earning a livable salary. Only 5 out of 100 of those people will get to the position to be able to retire. So when you're in a position like that and you're earning good money and you're overspending, in most instances, and I think it's around about just more than 2/3 of high income earners can survive for probably a month if they don't have a job, and after a month they're going to be in a position where they're going to have to sell something to kind of buy food and to pay the bills because they don't have any other reserves other than their monthly income.
You talk to us often about an emergency fund, and you often say that's the sort of one of the things you need to do at the very beginning. You're suggesting a lot of people don't have more than 1 month's salary in an emergency fund.
Most high-income earners don't. And it's almost the other way around, so that people that earn a relatively low income, and especially if their income is unstable and unpredictable, you'll find that they tend to have a bigger emergency fund relative to their expenses. So they can cover themselves for a month or 2 or 3 if they're in trouble. But people who are earning big salaries, they're stuck. And you often see this. One of the things around this two-part system when people started to draw money, that's one of the reasons that people would quit their job. Is you get into financial difficulty and you say, well, if I cash out my provident fund, I can live for a couple of months and hope that I get another salary. Those aren't people that are earning 3,000 or 4,000 rand a month. Those are the people earning 50, 100, 150,000 a month, and it's frightening behavior.
Okay, there's a sort of debt-to-income ratio which comes along at this point, and that's sometimes where the real problem is.
Yeah, and I mean, we don't want to use too much jargon. So just to explain that, if someone says you've got a debt to income ratio of 60%, what that means is if you're earning a salary of 100,000 Rand a month, you're spending 60,000 Rand a month just funding debt repayments, and that will be all debt. So that will be your credit cards, personal loans, overdrafts, mortgage, whatever it is. But you're using in this instance 60% of your salary just to do that. That means from 40% of your salary, you've got to get by and hopefully try and find a way to build your financial future. In other words, to save for the future as well, which is just not happening.
Okay, what causes this situation? And somewhere at the back of my mind, I'm fairly certain we're about to hear the phrase credit card.
Yes. So let's maybe start with just behavior, and it's so apt to do this topic now because I'm a little bit of a disciplined person around exercise. So I find myself parking my car near a gym and going for a run, and I said to my wife this morning after I ran, why on earth is this parking lot so full? And she reminded me that it's the beginning of spring. And every spring and every January, we find the gyms and the exercise facilities absolutely overcrowded for about 2 weeks. And after that, they get noticeably emptier very quickly. And by the middle of winter, they're super empty. And so I think behavior is a big issue. We find ourselves, getting access to credit cards, and the banks give us, nice credit facilities because we earn, a lot of income, and so they'll tell us we can service that credit card. And what happens then is we start to use the credit on that credit card just to fund lifestyle. In other words, it's not to buy assets, it's not to do something just to get by. It's to fund a much better lifestyle.
Part of this, and I mean, also, I suppose, if you are earning money and people see that you're earning money, you're kind of asked to look after people. You're kind of asked to financially support people. It might just be children, but it might be many more people than that.
Yeah, and because we're talking, about the high income earners, it's also about then, instead of just, making some clear, rational calls around, let's, send our kids to a decent government school. Suddenly it must be, the best private school around because, I'm a high income professional, and the need to look after parents is real, and potentially your siblings as well. So there will be some very particular need and a real need, real basic needs which need to be met, and we all want to look after our parents if we come from humble background, but it's then the step up from that. It's then saying, well, hang on, I can't just send my kid to any school. I'm a person of means. I've got to send them to a really named school, and so that's where the trouble starts.
Issues around cars. I mean, do cars play a big role in this? Because I think that a lot of people, it's kind of the first thing you do if you get a good job is you get a good car.
You do, and we see this behavior with people that have got theoretically prestigious jobs. Once you've got a job, with fancy titles and the commensurate income, then it's very noticeable how a lot of people in that sort of bracket will start to match the car to the title. And so it becomes a situation of saying, it's not just a means of transport to get from A to B relatively safely. It's a means of expressing my situation in life. Where am I? I've got to have a car that's appropriate to my position. And that's where, I think if we get into a cycle where we're changing those kinds of cars every 3 to 5 years, we're massively compounding an already, a tricky problem.
Okay, so then we have all of that. I mean, people kind of know or should know how much money, you should know how much money is in your bank account. And when you can see so much is going out, I'm sure I've done this. Do people justify it to themselves in some way? The way that because you're earning money, it almost allows you to justify it, whereas if you weren't earning the money, it wouldn't?
Yeah, and especially if you've worked hard, you've gone through the mill to get to a place and stage in life and in your career where yes, the position's demanding and you are working the long hours, but there is a story that we tell ourselves, and it will be something along the lines of, I work hard. I've got a tough job. I've got a high-stress job. I deserve to splash out. I deserve the nice car or the house on the hill, and that's the kind of tricky psychology here. It's not about what can I afford. It's about what I can deserve. And my sense of this is, we get to the point of not looking at the maths. Maths are, you can't argue with numbers. If a number says you're earning, 60,000 Rand a month after tax, you got to live from that. Spending that money on a car every month just doesn't make sense. But we find a way to justify by saying, I deserve it. Or often, don't worry now, I won't worry about saving, and I can fund this debt for now because later I'll earn more and more and more, and one day I'll pay back the debt and I'll save more. And it's this idea of, I can afford the payment on a monthly basis, so it's fine, forgetting about the fact that your debt is piling up. It's compounding and growing like a massive tree that's just going to weigh you down one day.
We're talking to Warren Ingram. He's a certified financial planner at Galileo Capital. Your questions for him on 011 883 0702 and 021 446 0567. I'm sure you've seen someone in this position. They're earning lots of money, but actually aren't wealthy. They're not financially secure. Warren, okay, so you realize you're in this position. And it's incredibly stressful. What do you do then? What sort of strategy would you use to escape? Where do you start to try and say, I'm in this tricky position. I am earning money, so I've got money coming in. How do I improve myself from here?
I think one, it's about a little bit of honesty. It's about saying, I have been living my life externally. So I've been doing things to portray success and to kind of live the image of success. And if you're going to continuously benchmark yourself with that by saying, I judge myself by how other people judge me, then what you need to understand is you've got absolutely no control of how other people perceive you. So it starts with just resetting that goal and saying, hang on, I don't judge myself by how others look at me. I've got to benchmark myself my own way. And I think understanding that, if you're professionally successful, if you're good in your job and you're generating a good income and you're kind of taking yourself forward in your career, it's pretty meaningless to do that without creating financial security as well. We don't want to be in a position where we kind of dig ourselves out of a hole. Maybe we come from very humble background and we get somewhere by our career, but we don't build a solid foundation financially. And so I think, number one, just getting to the point of saying, I'm not worrying about what everyone else is going to say now. I've got to get to some form of financial security. And don't confuse your income with wealth. There are lots of people that are very high income earners who are very close to broke. And the one thing I want to say there is, if you're a high income earner and you're overspending, you're basically just an expensive poor person. And that's a terrible place to be.
Yeah, no, geez, absolutely. Your emergency fund, do you start there?
Yep, I think once you've had a look in the mirror and you've figured this thing out, that you need to change the way you do things. We love the emergency fund. It's it is our protection. So if you've got no emergency fund and you won't be able to get there, within a very short space of time, start small. Start setting aside a bit of money every single month to build it. And if you find that you're one of those people that's just not that disciplined around your money, then potentially don't link it to your banking profile. Maybe open a unit trust money market account where it takes a little bit of pain, a bit of paperwork, a bit of hassle to actually access your emergency fund. So it's not money that just gets spent. But definitely that's the goal, and you want that to get to around 3 to 6 months worth of your expenses, so that you've got real protection if things really go wrong.
You're listening to The Money Show, Personal Finance with Warren Ingram. Your questions for Warren on 011 883 0702 and 021 446 0567. A question from Susan, Warren. She says, my father passed away, left me with 800,000 Rand. I'm 45, I have 3 teenagers. My husband wants to pay off our bond. I'm thinking about my kids' school and university fees. My friend says I should take it out of the country because of political uncertainty, and I'm completely overwhelmed by all of the advice. What's the right thing to do? That's from Susan. Susan, we'll have an answer for you in a moment. 11 minutes now to 8.
The Money Show.
Personal Finance with Warren Ingram.
And we had that question. Oh, it's 9 minutes to 8. We had that question from Susan. My father's left me 800,000 Rand. I've got 3 teenagers. My husband wants to pay the bond. I'm worried about school and university. My friend says I should take it out of the country. What's the right advice? I mean, often with personal finance issues, it's a bit like telling everyone you're expecting a child. Everyone gives you advice.
They do, and they're all experts, and and unfortunately they're not in your shoes, and they don't have your priorities. So I think the first thing is, definitely should be having this conversation with your husband, Susan. I think you need to be an economic team. But that doesn't mean that you just do what he says. I mean, I think you start by saying what's most important to us. If for example, the home loan is, really putting the family under huge financial pressure, then, that's a guarantee. You have the home loan, you know what the interest rate is. Any money that you put into that home loan will reduce your pressure by reducing the monthly payments, and that could be the thing that just tips the scales in your favor. So it could be that that's a good call. But if your home loan is very affordable, you're managing to save, and you're paying the bond down as you go, and the priority for you as a couple is education, and you haven't funded your children's school and university fees, then that might be the better route. So it will depend on what your priorities are, and also 800,000 Rand is a significant amount of money. So it means that you don't have to do an all or nothing decision. You could take a portion of the money, put it into the bond, and then take another portion of the money and pre-fund your children's school and university fees. I think if you're trading off decisions around a bond and school fees and university fees, then worrying about investing overseas because of something that's just uncertain, I wouldn't worry too much about the overseas investments for now. I think it's really going to be the trade-off between the bond and the education, and equally that you might store the money in the bond, put the 800,000 in the bond for now, and then draw out little bits when they're needed to pay for the education as you go. So give yourself the breathing room now, and then build up more and more money into that bond as you go, so that you can fund the education a bit later.
It's all about building momentum in a way, and that's what paying your bond can do for you.
Yeah, I mean, the thing about compounding is it either compounds for you or against you. And so, putting 800,000 into a bond, it's probably saving you around about 8,000 Rand a month of a debt repayment. And so if you put that money in and you keep up your monthly repayments that you were paying in, then all of a sudden you might be breaking the back of that bond and making a huge dent. And as you say, momentum when it comes to money, if it goes in your favor, it's amazing how quickly you can get a bond going down once you've broken the back of that big debt burden.
Just to sort of return to our main theme around high income earners, and now you've realized that you've made a mistake and you need to sort of start again, and you need to work out what you can save money on, how you can actually get back into a sort of financially secure position. So to stop just being rich and poor, if that makes sense. You talk about doing an image audit. What do you mean by an image audit? And I mean, I think a lot of us, we all want to look like we're kind of with it or whatever. What's an image audit in this context?
An image audit is kind of real nuts and bolts around, if we've got that driver within us to say, well, what would people think? How do people judge or measure us? One of the things to start asking yourself is, okay, so if I'm worried about what people think, this amount of money I'm about to spend on clothes or a car, etc., what does that actually do to generate an income for me? Is this expenditure going to make more money? Is it going to allow me to earn a bigger salary? And if it's not, then that's a big negative against spending the money. I'm not saying that's the only factor, but that should be the very first decision. If it's not going to help you generate more income, then you really need to think very carefully about it. And if you do judge yourself by the way other people look at you, then driving a car for an extra 3 or 4 years, will people really notice? Do they really care? And maybe one of the things to do is to ask people, do you notice these things? Do you really care? Do you think less of me? Will I be less competent as a lawyer, doctor, whatever it is, and see what they judge, how they judge you, and understanding then that the more you understand how people judge your image, that maybe the more realistic you become to say, a lot of this stuff is hot air. A lot of this is a movie I'm playing in my own mind, and the way people are looking at me is just totally different. And I always think, you buy a 3-year-old car that's worth 500,000 Rand. Is it so much worse from an image or perception or safety point of view than the brand new version, which costs 1.2 million Rand? And I think we know the answer. The 500,000 Rand car is perfect. Just look after it, and it'll look after you for a very long period of time. So do an image audit. If that's really worrying you, what people will think, how will they feel about this? Ask them in a subtle way. You don't have to be too obvious about it, but you'll be fascinated with the answers. And maybe last one is just around debt. If you are in a debt hole, the time to do something about it is now, while you've got an income stream, and say, just write those debts down, get a little bit of a debt plan going where you start to knock off the credit card first and personal loans and overdrafts, and then get to the mortgage and start rebuilding your financial position. You want to get to the point where you are financially successful as well as professionally successful. And almost all of this stuff is decisions you make and the things that you can control. So just take some action, take a small step forward tomorrow and get going.
I often find a lot of life is about patterns, and it's actually very easy to develop a pattern. Having coffee in the morning, you didn't grow up having coffee in the morning, or it's unlikely, so it's become a pattern. And spending is a pattern too. The cappuccino every morning, although why anyone drinks a cappuccino at all, I don't know. But the idea that actually you can break your pattern, isn't that the tough thing to do? And isn't that one of the lessons from this? You need to break your pattern of spending.
It is, and it sounds like a massive thing. So saying to someone, get rid of your debt mountain, because it feels like a mountain, and it might be crushing you. So give yourself a series of very, very small little goals. Tomorrow, if you've been buying 3 cappuccinos a day at the very fancy barista, just buy 2 tomorrow. And do that for a week, and then see what happens. Does the world end? Does something go wrong with your health? Probably not. You probably get a bit healthier, and then see what happens if you get to 1. And so do incremental changes that are relatively easy to accomplish, and maybe make a few lunches at home and take those to work instead of eating out every day. But do a few little things, and those things build the momentum that you were talking about, Stephen. And that's the thing that gets us going. When we create this massive big goal in our minds, it becomes so intimidating that we just don't do it. So give yourself small goal, take action tomorrow, and then do a new small goal next week and take another action and see what happens.
Warren Ingram, thank you so much. Co-founder at Galileo Capital. This will be available for you as a podcast. You might want to send it to someone who you think is in that position. They're earning money, but they're not actually saving anything.